This is Fire Sale with the Forex Report. In today's top story, the Internal Revenue Service has begun laying off over 6,000 employees nationwide as part of President Donald Trump's initiative to reduce the federal workforce. These layoffs, affecting approximately 6 to 7% of the IRS's 100,000-person workforce, come during the peak tax filing season, raising concerns about potential delays in tax return processing and customer service. The layoffs primarily target probationary employees with roughly 1 year or less of service, including workers in compliance departments responsible for ensuring taxpayers adhere to tax laws. Financial experts warn that reduced staffing could lead to slower refunds, longer wait times on hold, and increased instances of dropped calls. The National Treasury Employees Union is challenging these terminations, describing them as arbitrary and unlawful. Despite these concerns, the Trump administration maintains that the layoffs are permissible under federal employment law and are necessary to streamline government operations. Taxpayers are advised to file their returns electronically and promptly to mitigate potential delays. As the situation develops, we'll continue to monitor its impact on the current tax filing season and keep you informed. In the financial markets, gold has reached a new all-time high of $2,954 per ounce due to escalating geopolitical tensions between the U.S. and Ukraine. Analysts suggest it may soon break the $3,000 barrier as investors seek safe haven assets amid global uncertainty. Major U.S. stock indices have experienced declines, with the Dow Jones Industrial Average down 1.4%. and both the S&P 500 and Nasdaq Composite dropping 0.8%. This downturn follows recent record highs and is influenced by economic uncertainties and corporate earnings reports. In corporate news, Walmart's profit forecast has fallen short due to economic uncertainty, leading to a 1% drop in its stock price. In the UK, Barclays and Lloyds Bank have set aside a combined £1.29 billion for compensation related to a major car finance commission scandal. This provision addresses allegations of misconduct involving discretionary commission arrangements, where car dealerships set higher interest rates on car loans to increase their commissions. In the entertainment sector, Amazon has taken full creative control of the James Bond franchise, potentially leading to new films and TV spin-offs on Amazon Prime Video. For investors seeking opportunities, top Wall Street analysts have identified 3 stocks as strong buys. Global E Online, GLBE, a leading provider of cross-border e-commerce solutions. Global E Online enables retailers to expand their international sales seamlessly. With the continuous growth of global online shopping, the company is well positioned to capitalize on this trend. Dynatrace, DT, specializing in software intelligence. Dynatrace offers monitoring and performance analytics for cloud applications. As businesses increasingly adopt cloud technologies, Dynatrace's services become essential for ensuring optimal performance and reliability. Uber Technologies, Uber. Beyond its ride-sharing services, Uber has expanded into food delivery and freight, diversifying its revenue streams. The company's investments in autonomous vehicle technology and AI integration position it for future growth in the transportation sector. In the banking sector, Lloyds Banking Group reported a 20% drop in profits, partly due to a £700 million provision for potential compensation in the motor finance scandal. In the commodities market, oil prices remained stable after an industry report showed rising U.S. crude stockpiles. Brent crude is up 0.5%, while West Texas Intermediate is gaining 0.4%. Higher oil prices can lead to increased gas prices at the pump, affecting everyday Americans' wallets. If crude oil continues to rise, expect to pay more to fill up your car, heat your home, and even buy groceries, as transportation costs trickle down to consumers. In the technology sector, Amazon's acquisition of creative control over the James Bond franchise may lead to new content for Prime Video subscribers, potentially enhancing the platform's value proposition. And finally, back to Forexx. The British pound has gained slightly against the dollar, but remains under pressure due to high inflation and economic slowdown concerns. The Canadian dollar has weakened slightly, while the Australian dollar remains volatile following the Reserve Bank of Australia's latest rate cut decision, its first since 2020. The Japanese yen has rallied to a 2.5-month high, bolstered by stronger global economic data and cautious Federal Reserve outlooks. This surge indicates increased demand for safe haven assets amid global uncertainties. The Japanese yen is now the best performing G10 currency so far in 2025, according to MUFG Mitsubishi UFJ Financial Group. The yen has gained 4.8% against the US dollar and 4.0% against the euro, driven by narrowing yield differentials and stronger than expected Japanese GDP growth. The US-Japan 10-year bond spread has tightened by 50 basis points, while Japan's bond yields surged to 1.45%, signaling expectations of further Bank of Japan rate hikes. MUFG remains bearish on Euro JPY, expecting the yen to continue strengthening and the pair to decline toward 150. Here are the top gainers and top losers so far in today's Forex market. Stay sharp, stay informed, and trade wisely. This has been Fire Sale with the Forex Report.